and Germany is considering relocating its significant gold. Germany's reserve, the second largest in the world.
Germany just made a move that could send shockwaves through the global economy. They're repatriating their gold again. But this isn't just about shiny metal. It's about control, power, and deep distrust in the current system. So, why now? And what does this mean for the future of global trade, bonds, and crypto? Let's break it down. Germany just pulled a power move, and it could shake the pillars of global finance. They're moving their gold again, but this time, it's not just about shiny metal. It's about sovereignty, distrust, and a massive shift in how the world does business. After World War II, Germany placed most of its gold in foreign vaults in New York, London, and Paris. It made sense at the time. The Cold War was brewing and Europe was rebuilding. But in 2013, Germany began bringing that gold back home, over 600 tons of it. Why? To regain control and reduce reliance on foreign custodians. And now, it seems they're doing it again, with bigger implications. This isn't just about logistics, it's about trust. When Russia's assets were frozen in 2022, it sent a clear message. Foreign-held reserves aren't always safe. Germany might be thinking ahead. What if their assets became political bargaining chips? There's also growing global instability. US debt is ballooning, inflation is sticky, and central banks are preparing for turbulence. By holding gold directly, Germany regains full control, no middlemen, no conditions. Russia's frozen assets in 2022 were a wake-up call. Over $300 billion locked down. That message wasn't lost on other nations. Your money isn't really yours if someone else holds the keys. Germany knows that geopolitical tensions are rising. The global financial order is shifting, and holding your own gold is about more than just safety. It's about sovereignty. This isn't just about logistics. It's about trust. When Russia's assets were frozen in 2022, it sent a clear message. Foreign-held reserves aren't always safe. Germany might be thinking ahead. What if their assets became political bargaining chips? There's also growing global instability. US debt is ballooning, inflation is sticky, and central banks are preparing for turbulence. By holding gold directly, Germany regains full control. No middlemen, no conditions. When countries move toward gold, they're usually moving away from something else, like US treasuries. And that's a problem. Treasuries are the bedrock of global finance. If demand falls, interest rates rise. And if enough countries shift, the ripple effect could be massive. In 2023 alone, central banks bought more gold than in any year since 1967. That's not random. That's a trend. Gold is not just a safe haven. It's a warning signal. When countries stock up on gold, it often means they're losing faith in US Treasury bonds, the cornerstone of global finance. As more nations follow Germany's lead, the demand for US bonds could decline, raising interest rates and shaking the bond market. Gold becomes the hedge, the ultimate plan B. And this aligns with what we're seeing. Central banks globally are on a gold buying spree, the biggest in over 50 years. The dollar has long dominated global trade, but that dominance is now under pressure. BRICS nations are exploring ways to trade outside the dollar system, possibly using gold or even commodity-backed currencies. Germany's move aligns with a broader shift toward independence from the dollar and toward assets that don't rely on any single government. The future of trade could be more decentralized, more multipolar. This gold shift hints at a deeper play, reshaping global trade. BRICS nations are openly discussing trade outside of the US dollar. Gold-backed trade, or even digital currency backed by hard assets, could emerge. If Germany and others join this trend, the dollar's dominance in trade could weaken. We could see a more multipolar financial system, one that doesn't rely on any single reserve currency. Crypto, like gold, is seen as a hedge against failing systems. It's decentralized, resistant to censorship, and not tied to any single nation. As global trust in fiat erodes, both gold and crypto are stepping into the spotlight. They're not rivals, they're running in parallel. Hard assets, new rules. Gold isn't the only hard asset in play. Crypto shares a similar narrative, decentralized, outside traditional control, and increasingly attractive in uncertain times. If trust in fiat continues to erode, digital assets may rise alongside gold as part of the new monetary reality. Think of it as the 21st century's version of sound money. Germany's gold move isn't just symbolic, it's strategic. It's a signal that the old system is cracking, and the race for financial resilience is on. Whether it's gold or crypto, one thing's clear: the future of money is changing, fast. Germany's gold move isn't just about shiny bars. It's about control, independence, and preparation. As the world reshapes itself around new powers and new currencies, one thing is clear: we're heading into uncharted territory, and those who control hard assets may write the next chapter of global finance.